In fact, let's hear it from Saurabh Mukherjea of Marcellus Investment, and he remains fairly bullish on export-oriented companies, private banks as well as FMCG, and he expects to see a revival in Capex after the 2019 elections.
I think the outlook is of an economy which is decelerating since 1Q, of a country where cost of capital is gradually inching up. Even if the RBI cuts rates in February, I think generally the cost of capital, the 10-year bond yield and the 3-month CP is pushing upwards, and of a currency which will stay with a 70 handle on it, potentially push towards 75. I think that's the broad picture for the next 1 or 2 years. Export-oriented sectors, well-run private sector banks, small ticket consumption, FMCG consumption, to some extent the elements of consumption such as apparel, where you don't have to borrow to buy, are a good space to be. We will see a revival in the Capex sector one day, but I think that revival in the Capex sector comes after the election, and that comes after there is some sign that cost of capital might start trending down in our country. Wherever consumption is not financed by borrowing, I think things are in pretty reasonable shape in our country. So FMCG is an obvious beneficiary. I would even say things like apparel, you can see volumes are brisk. So there is enough juice in the economy that those who don't need to borrow money for small ticket consumption are going out there and buying things, and hence the bumper FMCG numbers. The Indian pharma is a price sensitive export, and the rupee staying at 64, 65 for 4 years was deeply damaging for Indian pharma. The slide to 71 of the rupee will help pharma. I think the first signs are there that it will help.
That's the take coming in from Saurabh Mukherjea on the markets as well as individual sectors. But Colgate is the stock of the moment.